Our guest founded Blackstone, the world's largest alternative asset management company by some length, exactly 40 years ago. We are delighted to welcome a colossus of the world's private equity industry, Stephen Schwarzman. Steve, welcome to Moneycontrol.
Well, it's great to be here.
Thank you. Thank you, Steve. So it's 40 years since you set up the company, when Ronald Reagan was president and Gorbachev was general secretary, when the Soviet Union was still around. I'll just come to that in a moment. It's also your 20 years in India, right? Blackstone entered India in 2005. You have more than 1 trillion of assets under management worldwide. India is still just about 5% of that. India is about 50 billion, if I've got the numbers right. How do you, is there a number that you can give us to our viewers in terms of how this number can go up? Can 5% become 10% or 15%, and over what kind of period of time?
Well, it's great to be back in India. When we decided to come here, we announced that we would put $1 billion in India.
Right.
And people here probably forget that 20 years ago, that was a huge number. And we were on the front pages of all the newspapers. And now, as you say, we're many times what we expected to be, because the country is such a great place to operate. India happens to be our number one performing market in the world for Blackstone. Our returns here on a gross basis are somewhere around 40% a year, way in excess of any other market. And we've spent our time building businesses in India to make India better. And we foresee being able to double where we are, to have a total exposure of $100 billion at some point in the future. We're rapidly growing here in India. We're the largest foreign company in the country. We're the largest owner of real estate in the country. We're the largest private equity firm here. We're in all kinds of interesting areas. And we found that operating in India is great, and we're very bullish on the future of the country. I know the stock market's gone down a bit lately.
Right.
Gets people nervous. In the 20 years we've been here, this isn't the first time we've seen that. So we look at the fundamentals in the country. You have excellent stability of political leadership. Regulations have gone down from where we started. We see a very vigorous population, a lot of young people, sort of a preference for technology, technology industries. So we are very positive on the country, and it's great to be back.
Thank you. So you're talking about 100 billion of assets under management in India over, that is, if you were to double that number.
No, you gave us the right number.
Right.
And we think we can grow
right.
To $100 billion.
Right. Has it, you've been here for 20 years. In these years that you've been here, has it generally become easier to do business in India in terms of regulatory environment? And more importantly, what are the changes that you would like to see?
Well, it has gotten easier. It was pretty difficult for a foreigner.
Right.
20 years ago. And we had some investments that didn't work out as well.
Right.
What we did is we learned how to work here, and the country changed as well. But what we learned is that we were best off owning businesses ourselves and being able to control the direction and success so we can build really successful businesses. We learned that just being minority partners wasn't to our taste. It's not what we do in other places in the world. And it was done 20 years ago a lot, and we just defaulted to what we're comfortable doing. And with growth rates at that time in the 9% area, now in the 6.5% area, that's amazing growth by global standards. And if you control assets, whether they're real estate assets or corporations like we do, then things go quite well for you here in India.
Right. So you are the country's largest landlord. You also have a large presence in the healthcare industry in the recent past. What are the other sectors that you could get into? Would you get into areas like data centers, for instance, or some of the what is referred to here as startups, consumer-enabled internet companies, those kind of areas?
Oh, actually, our biggest exposure here, we'll continue to do more, is in technology.
Right.
And all kinds of expressions of what technology means. So, for example, Blackstone is the #1 developer of data centers in the world. And we're also the #1 owner of data centers. And this is just the start of the data center industry for India. And we can see very substantial growth there as artificial intelligence becomes much more widespread. The growth numbers are stunning in the rest of the world. And off of that base, along with the energy that's needed to power data centers, we would call it energy transition investing is a big focus here. As you mentioned, healthcare is also important, given the size of the population in India. We have the second largest hospital group in the country.
That's right.
Among other things. And we can see more growth in that area as well.
Right. Since we have the honor of having you here, it would be remiss not to ask a few questions on what's happening around the world in the global economy. So there are two narratives, essentially. One narrative is that we are on the cusp of perhaps an AI-driven productivity boom, coupled with the deregulation that President Trump has promised. What are your views on that?
Well, I think AI is something I'm deeply involved with, starting in 2015. And I ended up making a philanthropic gift to MIT, which is our largest technical university, for their College of Computing. And so even though I'm not a technologist, I hang around people like that,
sure.
who are in the cutting edge of that technology. And what they have believed, really since I got involved, and what they believe even more strongly now, is this is going to be a transformative technology. We're just starting to see it. It's sort of like now the invention of electricity, and nobody knew what to do with it at the start other than a light bulb.
Right.
And now we use electricity for virtually everything, whether it's your air conditioner or your refrigerator or your washer or, all kinds of activities. And so we're just starting to develop applications for artificial intelligence. And there are some people who believe that within 5 to 7 years, there's going to be a huge jump start when we get to what's called AGI, artificial general intelligence.
Yeah.
And so there's going to be a lot of changes as a result. Some will be very good. There's conventional wisdom, is that the invention of drugs that help keep us all alive is going to go up by probably at least 3 times. And much cheaper to develop drugs while you're doing much more volume. Education will change with individualized education that can be beamed around the world. And it's particularly important for countries that have low GDP per capita, people who don't have much money, don't have great education systems. and there'll be a variety of transformations. On the negative side, there'll probably be some change in the number of people.
There will be job losses and so on.
Right, who can do certain functions. There's also a risk, that criminals who, as a rule, aren't so smart, they can be smarter with AI. And you have a risk of AI being used by rogue states. So it's a technology that needs a careful control over time. But the prospects for wonderful achievements for human beings are definitely there.
Could AI technologies draw up a term sheet, for instance, or structure a private equity deal?
In terms of private equity? With AI? Well, if private equity owns businesses, that's its job. And businesses will be affected. Some areas can be replaced. Humans can be replaced. If you talk to the people who are pioneering products, the objective of AI is to work with people in the knowledge industries so that they can do research that would normally take weeks or longer. You'll be able to do that within 5 minutes. And so it'll be like having a very powerful group of people working for you, except it's just a machine.
Right. So I talked about narrative. Now, there is, of course, the narrative of an AI-driven productivity boom. But right now, I think the narrative which is dominating the airwaves, as it were, is the disruption or the uncertainty caused by tariffs going up and down. What are your views on that? How does one navigate this? Will this sort of die down? Is this a short-term situation and the new administration will get its bearings, will find its footings and, and things will sort of come to some kind of equilibrium in a few months? How do you see things panning out?
Well, I think it's pretty clear that there's been a change, and that tariffs are on the table. The reason for that is the prospect of countries having equal access to each other, which is a good theory of the case. And so it'll take a while for that to work its way through. But I think the world will be able to absorb those types of changes. And then we'll move on. There'll be some period of uncertainty, which is what's prompting your question, which should affect markets over the short term. But I think this is a short-term phenomena. There are all kinds of adjustments that occur were tariffs to be applied to a country. Currencies get weaker. There's shared cost between people who make goods, people who buy goods, and the system should accommodate all of that.
Right. You worked closely with President Trump, especially in his first term. India is about to negotiate a trade deal with the US. One doesn't know exactly how much time it will take. What would you advise India's political leadership to do when they approach negotiations with President Trump's administration?
Well, let's just start out. I'm not a government official.
No, of course.
I'm just.
We're very clear about that.
Somebody who knows almost all the people involved with these types of things. First of all, Prime Minister Modi and the president had a very good meeting, which is a great start. And they agreed to have a trade agreement between the two countries.
Right.
And they also made some other mutual understandings, evidently, at that meeting. And so I think that the baseline for India seems to me to be very good. There's a good relationship with the two principals. There's a lot in common. There's a favorable attitude, each country to the other one. And I think you just sort of start with a discussion. Evidently, there's already been a number of adjustments that the two countries have made. Right. So I know there's always a high level of anxiety when anybody brings this subject up. But I think the quality of your leadership in India and the ability to reach agreements should be very good.
Just to come back to India for a moment, there is the China plus one strategy which most MNCs are following. Blackstone has a presence across a wide range of industries. Now, India fancies itself as the plus one, although there are competitors like Vietnam, most prominently, perhaps Indonesia as well. Do you see India's name coming up as a possible substitute for China when it comes to global supply chains?
Well, I think it's been a difficult time period for China.
Right.
They will go through some adjustments as well to their benefit. But at the moment, India became, sort of top of mind for the business community as an alternative.
Right.
And that's a great opportunity for India. And I think it's important that India capitalize on that opportunity. It's got sort of low cost labor, smart people. It's got some challenges with logistics and internal infrastructure compared to China, but there's a sort of a curiosity about India now. You must look at it if you're a corporate executive that's manufacturing offshore. And so it should work out quite well for India.
Steve, it's been a wide-ranging discussion. We were able to cover many topics ranging from President Trump to tariffs to India's role in the new global economic order. Thank you very much.